This is Bruce for Hola Prime, taking a look at the dollar Swiss, pound yen, and the S&P 500, starting with the pound Swiss. So the first thing to keep in mind here is that we had extreme oversold conditions, a big drop. I measured it before. I don't remember what it is, but this drop I'm pretty sure is larger than this, larger than these two previous drops, and it hit a similar area of being oversold at previous lows. Then we get this declining parallel trend channel, this small downward sloping consolidation, followed by an upside breakout, a sharp upside breakout with a strong close. This is the daily chart. So having said that, I think there's more upside going into the intraday pattern. We can see that I'm going to go to the 2 hour now, and we can see that it rallied out of this channel here, and then hit resistance and formed a head and shoulders top, triggered that top the other day, and to the downside, and fell, had a one leg down, and now reversed back to test it as resistance. So the orange is the 50 moving average. So we could say that that was a support of this head and shoulders top, broke down, found support around the 50% retracement, rallied back, tested it as resistance. So support becomes resistance. Now we have the potential for a turn down and a second leg down, which would create the CD leg of this potential ABCD pattern. And that target's down here at 81.43. There's also a 61% retracement at 81.52. Nevertheless, there's some potential downside if there is a trigger and a setup that goes along with what you're looking at. So that is for the Euro Swiss. And then we have the pound yen. We've looked at this before. Backing up a bit, you can see this declining parallel trend channel and the bounce off the bottom of the channel at the 78.6% retracement and the completion of an ABCD target. Bounced strong, consolidated into a pennant pattern, broke out, and then rallied up to the 61% retracement, 61.8% retracement, and now is showing signs of resistance. But the potential is somewhere higher, up closer to the top of the channel if the pattern overall all follows through. Now, that doesn't mean it will. It just means that it could. So there is more potential upside. If we go into the 4 hour chart, we can see this bull flag that has been forming. And if we just do a quick measuring objective, taking the initial move before the flag, and certainly it could be larger, but let's just take this as a quick assessment. Let's say the breakout is somewhere around here, which correlates with the 200 moving average on the 4 hour chart. And then that target gives us around 192.98, a little bit shy of the 78.6% retracement, which would be the other target at 193.50 approximately. Okay, and of course, if there's a drop much further, then this flag becomes invalid, and there has to be a trigger. But it's there, and it's a potential bull flag breakout. And then we have the S&P 500, which continued to show strength today with the breakout above yesterday's high, and stopped, guess where? Right at the anchored volume-weighted average price from the high. Okay, so that's potentially significant, at least a short-term resistance level. So far, buyers are pushing right up against it. There's a potential to break through it. The next higher level is 5,613 and 5,646. The 50 moving average, simple, and the 61.8% Fibonacci retracement. So it looks like there could be more upside before there's a pullback of note. And keep in mind that we only broke out to above this prior swing high 2 days ago. So let's see what happens. Momentum is still to the upside from what I am seeing. All right, that is it for today, traders. Have a great week.